Okay, so today, as you can see, we're going to break down a commercial real estate deal. And this is actually an idea that I got from having a conversation with my dad probably maybe a week or two ago. He was asking me kind of how things are going, how the podcasts are going. He's listening in and he said, it would be really helpful for someone like me who's not really familiar with commercial real estate to see like why you like certain deals and why maybe you don't like certain deals. And I thought about it because one of my biggest challenges, if you will, of showing live deals is that it invites competition. And the reality is, as the title of my podcast, which is The Investing Advantage, one of my advantages is seeing deals before other people see them. So I thought to myself, okay, well, how can I still show you kind of a real deal without showing you too much of it, so to speak? So I thought what I would do is I would kind of outline a deal that I'm looking at right now. I'm not going to give you the address or the location because it was literally sent to me yesterday from a very good friend of mine who's also a broker. And I don't think he would appreciate because number one, when good commercial real estate deals go live, they send them to very specific people. And so I was fortunate enough to be on that list, and I don't want to jeopardize my relationship with that broker because he is a steady stream of deal flow for me. And he sends me deals because he knows that I have the capacity to close them. So that's kind of enough of the setup, if you will. And really what I thought I would do is kind of walk you through kind of, this is like the timeline of the deal that in terms of how I approach and typically what you can expect. So the deal is sent to me. Like I said, I've got the relationship. This broker knows me. He knows what I'm looking for. I mean, these guys sell probably $2 billion a year in commercial real estate, and they're not going to send me every deal. I mean, if they're doing, $400 million office tower downtown, that's not in my wheelhouse. If they're selling a core plus asset at a 4.5 cap to, that really has no value add opportunity, he knows that I'm not going to be able to compete there. But this particular deal, I will say it's retail, and I will say that there's some hair on the deal. Hair meaning there's some issues, and that's kind of right in my wheelhouse. Now, the challenge is always figuring out how many challenges you can kind of deal with on a deal by deal basis, which we'll get to on my 8 non-negotiables, because that's really how I determine whether or not I'm going to kind of proceed. Because as you can see on my timeline, so this is a timeline, T meaning 0, and then this is kind of, well, you'll see when we get to here, but that's like this whole time can take, 60 days to maybe 90 to 120 days. But I would say, generally speaking, it's about 75 days. And so I'm going to kind of walk you through. Let's just get into it. So really, on day 0, I get an email sent to me, right? And so what I start with is what I call my back of the envelope. And I had the actual worksheet. I don't have it with me. Actually, hold on. I do have it. It's right here. Okay. So this is a little bit of the deal. And it was, this is just kind of like a really high level. It's about 65,000 square feet. I know it's going to trade around 25 million. I figure out really quickly what's my price per square foot. So in this case, I'm a rate around $380 a square foot. I know for retail in Calgary with land and construction, I'm well under market. The rents in this complex are about $25 a square foot. That also good. I know that the rent should be probably 28 to 30. So I've got a little bit of room there. Then I look at the tenants. Now I don't have, so I get the deal. I can look at the pricing. I look at the square footage. I look at the location, right? So my 8 non-negotiables, size being the first one, location being second, cash flow, right? I know I'm getting cash flow. Am I buying below replacement value? So those are like immediately the first 4 check boxes of this deal are looking good, right? Which is why I'm putting energy into it. I sign a CA, so that's a confidential agreement with the broker. stating that I won't share any information, which is also one of the reasons why I can't get into it. Now, I've signed the CA, but I haven't received what's called the CIM, and that's like the confidential information memorandum, something like that. Basically, this is the detail package that a broker is going to send out. Okay. This is all happening, like literally up to here is probably happening in a day to 2 or 3 days. So I get the email, I do a back of the napkin. Like I said, 5 minutes. Number 2, I sign the CA. Number 3, I fill out and I do the CIM. If you're watching the video, it's going to be a lot more impactful. We'll put a link to it in the show notes if you're listening to this on the podcast. Then I'm going to tour the property. Immediately, like this isn't totally sequential. Like a lot of this is going to happen in tandem, if you will. Like the minute I got the CA, I went and looked at the map. Probably either later today or tomorrow, I will actually go out and do a physical tour. I'll walk the property, not with the broker because I don't need the broker there. This is a public property in the sense that it's retail. I can just go in and act as if I'm a buyer, if not a buyer, sorry, like a customer of the stores, right? I just want to see who's there, what kind of activities going on. Do the tenants look busy? Do they not look busy? So I'm going to do all this. And then I'm going to I probably won't, I put this here early. I want to know what the opportunity is, what the story is, but I'm only going to talk to the investment sales guys, or in this case, because it's a major shop, I would ask them to put me in touch with one of their leasing agents to find out who else I could put into this particular property. Because what I want to do is I want to find out what the opportunities are. Where are the pitfalls? Now you have to understand, if the same brokerage, which has the investment sales arm and the leasing arm, right, they're going to be under the same brokers, they're going to know each other. The leasing guys aren't going to sewer the investment sales guys by saying that it's a bad property. There's not going to be a lot of referrals there. So you kind of have to take what people tell you with a bit of grain of salt. Excuse me. So now that I've got all the way to here, if I'm comfortable, I'm going to submit what I call an LOI, or a letter of intent. It's going to be a non-binding contract. It's going to outline the basic terms of the deal. Pricing, terms, who the buyer is, and we're probably going to negotiate that for about 7 to 10 days, okay? In there, I'm going to have who's going to create the purchase and sale agreement. And in this case, I would like to control the PSA, or purchase and sale agreement, or agreement for sale. However, what happens in some cases, if this is, I don't know who the vendor is yet, but I will find out. And I'm going to find out other questions. I'm going to ask how much it was bought for, why are they selling? And the reality is I may get real answers, or I may get platitudinal type answers. And that's just the reality of commercial real estate. No one's going to give you, like, a lot of this work is going to have to be done on the back end in terms of your due diligence and research. Okay. I'm going to back up just 1 second and make sure. So when I'm talking about opportunity, when I go out and tour the property, I'm also looking at certain things like, so in this case, I know how big the land is. So let's just say it is 10 acres. It's not 10 acres, but like I said, I just want to keep it kind of easy. There's 43,560 square feet in an acre. So if it's 10 acres, it's 436,000 square feet. Now, if I know how many square feet this property is, let's just say it's 70,000 square feet, I know that I've got lots of room to increase the density. Now, in this case, when I did my calculation, I'm sitting at about 25% site coverage, which means for retail, that's fairly high. There's probably not a lot of room to expand or do more development, because what happens is it starts to eat into your parking, okay? And because this is all one level, this isn't vertical, that's likely the case. Now I'm going to have to go out and tour it, but that will be something that I'm going to verify. Because when I'm looking at the opportunity, I'm looking at how can I push the NOI, right? How can I get my NOI up? And you can either do that through increasing revenues or decreasing expenses. And I like to increase the revenues, which means I like to either get the rents up, I like to get more density, like whatever I can do to push the NOI essentially. Okay, so we get all the way to the PSA. Now the PSA is when I'm going to have to engage a lawyer, and this can take, I mean, in some cases it can take a week, some cases it can take 2 weeks. My due diligence is not going to start until I've got an executed purchase and sale agreement. And that's important because you don't want the clock to start ticking prior to that. And some people, some rookies will make the mistake of, because they're going to get some due diligence information here, the vendor's going to want to start to push you hard. And you've got to say, you know what? I'm not spending money until I've got a PSA. Because now, once I get a purchase and sale agreement, like, I got to go fast. I've got to do all my due diligence, physical, financial, legal. I've got to start raising money, both debt and equity. I've got to create my legal structure and my, both from a tax perspective and from a legal perspective. Because here in my structure, I'm going to have, in my case, I'm going to have a GP and I'm going to have an LP. And so in both situations, that's going to cost me money, because money's going to flow in. It's probably going to go to my lawyer's trust account. And once again, I don't want to start raising money until I've got all these kind of things figured out. So this 30 to 45 days that I've got for due diligence is going to go very fast. Once I remove conditions, I'm what's called hard on the deal. And once I'm hard, my due diligence money is non-refundable. So I'm probably going to have a first deposit here, and I'm going to have a second deposit here. And those numbers are always negotiable, but there are rules of thumb. Way too long to get into that today. Just understand that that there's going to be a first deposit and a second deposit. You're going to start spending money all through here. I bank on anywhere from $25,000 to $75,000. It just depends. I'm going to start raising. I'm going to talk to my debt immediately. I'm probably talking to my debt back here somewhere, because I just want to kind of vet it. Which is also why having a relationship with a really good team is so important. And the reason for that is, if I start talking to my mortgage guy back here about a property that isn't broadly marketed, and I don't have a good relationship, the reality is, in commercial real estate, that now gets, people talk. And so what happens is, now the mortgage guy that's done 10 deals with someone else, he says, hey, did you look at that property on 1st Street and 20th Avenue? Oh no, I didn't hear about that. Is that for sale? Yeah, that's for sale. This guy, like, people talk. And I'm not saying that you need to be paranoid, but as you can tell, one of the reasons I'm not talking too much about this specific deal is that there is an element of, I guess, paranoia that is healthy in commercial real estate. And anybody that says that they aren't, either hasn't, in my opinion, hasn't invested long enough, or hasn't had good deals taken from underneath them. And it does happen, because great commercial real estate deals, I mean, if you can make 7-8 figures on one deal, you start to see you start to see what happens with people. So anyways, enough said on that. So we've come all the way to removing conditions. Now I'm hard on the deal. Now I've got to really start to put like a hard press on both my equity and my debt. I'm gonna already have made sure that I've got a commitment letter that has been agreed to, as well as not just agreed to, but the mortgage commitment that I get from the bank, I've satisfied all the terms. I just did a great interview with Chris Herron from Miller Foreign last week, and so I'm going to pop that up here probably in the next couple of weeks, where we talked for about 45 minutes on kind of the sequence, the timeline, because I don't know, I'm very visual. So we did a timeline on how to raise debt, and because that is such a critical piece of making sure that you've got the ability to close on a deal. So once you remove conditions and you close, then you're into fixing up the property. And so I want to have a plan. I'm going to start developing my plan back here, because that is going to influence both my debt, my equity. It's going to be influenced by my physical due diligence, my financial, my legal. So even though that this looks like it's linear, none of it is linear. And all of the moving parts, if you will, let's say I get into physical due diligence and I realize that we need a new roof, or I realize that the HVAC is shot, or the parking lot, or something. Now, all of a sudden, that's going to influence how much equity I need. It's going to influence the debt, because now the mortgage broker is going to come back and say, well, the lender that's looking at financing this deal isn't comfortable, because you're going to have to put $1 million in to replace the roof. Well, how are you going to deal with that, Shane? Well, I mean, can we do a holdback? Can we do this? Can we do that? I mean, there's just so many variables that what I'm trying to do in this episode, if you will, is just give you the big picture, because to drill down into each one of these scenarios, like I can tell you right now, I'm dealing I'm under contract on another property, which means I have an LOI. Now I'm going to PSA. Well, the number of things that have come up just from step one to step two, because the vendor, I don't want to get into too many details because it's live, but things are changing. And I don't like when things change from an LOI to a PSA. And so there's some challenges there that we got to work through. Now, all this is common and typical, but you got to be prepared and you got to understand, because when someone just says, well, I just want to put this one clause in, and if you don't have experience understanding what that one clause actually means, then you leave yourself open. And when you're dealing with a 4 or 5, in this case, it's a $4 million purchase, but with the potential to do kind of a $25 million development. Well, if I let that one clause go in, and I'm not going to talk about it on this because it's live right now, then what happens is I leave myself open for, I'm subjected to A, losing the deal, and B, being very vulnerable throughout some of my due diligence. And I don't like that. So this isn't to say that you need, quote unquote, a consultant or a coach to help you through this. A good commercial broker, this is why I have to qualify it, because a good commercial broker will head that stuff off at the beginning. Other commercial brokers that are maybe not as experienced or haven't even bought properties, or maybe they're just trying to drive the deal home, they're going to let you determine what is acceptable to you and what isn't. And so it's just super important when you're dealing at this kind of high level, when you're dealing with commercial real estate transactions, that you have like a good understanding. And even if you can just find someone that has been where you want to be, and you bring them into the deal so that you can, that they kind of help you along, or you pay them. I mean, walking you through all these steps, even though I kind of rattled it off in 17 minutes, like I said, this has taken me years to really understand and figure out. And on each deal, I learned something new. But what happens is, because I've got this foundational knowledge and I understand my non-negotiables, I have my investing religions, my principles. When I get into a deal, I can start to say, you know what, this deal isn't for me, or this deal is for me. And then at each junction, I'm able to start making decisions very quickly, because this may sound like a lot of time, 75 days, man, it goes so fast, especially when you've got to raise, call it $10 million. In this case, this is a $25 million deal. So when you're starting to raise money at kind of big levels, and even if it's just a $5 million deal, it really doesn't matter. The same level of attention to detail and structure is required. So I'm just going to kind of quickly give you the 8 non-negotiables, right? I mean, this is a free download that I have on my website at shanemelanson.com. But we've talked about a few of them here. So number 1 is deal size. For me, I won't even look at a deal if it's not big enough. And so for me, how big a deal needs to be is going to be different for you. I'm just going to say, on average, minimum $5 million, up to 20 is kind of my sweet spot. Number 2, do I like the location? Number 3, do I understand it? Am I competent? Number 4, is it functional? Meaning, for example, if I was looking at an apartment building or retail property or something to that effect, and the ceilings are too low, or there's not enough parking, or anything along the lines of that. Maybe there's no access. Functionally, it's going to be flawed. Number 5, can I get leverage on the property? Meaning, can I buy this free and clear, or am I going to have to inherit some crappy debt? Number 6, does it cash flow today? Number 7, am I buying below replacement value? And number 8, do I control it? Meaning, am I able to buy it on my own, or do I have to take on a partner or the vendor, or all these kind of complex things? It's not to say that I wouldn't do that. It's not my preference. So if it sounds like I'm in a bit of a rush today, it's because at 7 a.m. I'm actually meeting with some investors to talk about this deal. So I've got to get going. Last, as usual, if you want a copy of my book, clubsyndication.com, you can certainly go and download it. You can just go to my website, and I believe that there's a link there that you can go and download it for free, as well as you'll see the 8 non-negotiables that are included. That's really all I have for today. If you enjoyed this show, or if you had any kind of questions, reach out to me. Shoot me an email. I try to answer as many as I can. Maybe not always direct, because as more and more people start kind of asking questions as it relates to commercial real estate, what I try to do is answer, the questions that I'm getting on a more mass scale. But I do appreciate you taking the time to listen and watch this, obviously. And like I said, yeah, if you got any kind of specific questions as it relates to doing a deal, I tried to do my best in 20 minutes to break down how I would do a live deal today, because this is exactly what I'm doing. And like I said, it's not sequential. It's going to happen in tandem, a lot of these steps. However, this will give you the framework for what you need to focus on. So that's it for today. Hope you enjoyed, and we'll see you next week. Bye for now.